Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Saturday to you and your family. Hope you're having a great day regardless of how awesome the market is right now. Yes, I'm being facetious and yes, it sucks, but what else can we do except the fact that we just love this, right? Because it's better opportunities and more potential. Now, I got a lot of requests here recently as to, hey, can you cover this? Because obviously it lost key level support. We'll look at that and much more, kind of identify a handful of other things as well, and just make sure we understand once again, best practice and big picture here. So if you are new to the channel, I am not a financial advisor. I love teaching people how to trade, and I hope you can learn something here today, of course. So please consider becoming a community member. I teach you how to trade. Yeah, trade you how to teach. And I also provide you with signals for every single trade that I take. And just really an amazing experience with my community. We have weekly discussions. It's a really awesome experience. So be sure to check that out in your own time. That being said, here is what's going on with Ethereum. So it doesn't look great. We lost a pretty strong support level here. So right around 17,000, sorry, 1,700. 17,000 would be nice, perhaps in a few years. But right around 1,700, I'm kind of rounding up 1,715. Just say 1,700 is a key level here in which we saw the price action hit 1, 2, 3, 4 times in basically last summer. So if you recall last summer, if you were still trading at that time, we had a significant dropout like May 17th, and then it wicked all the way down to 1,700. And then of course, June all the way through July, where it actually breached 30,000, hit like 28,500 roughly. I'm talking about Bitcoin here. Then, Ethereum essentially dipped down that low and tested that level again. So what I'm getting at is that we have 4 consistent areas that the price was tested and couldn't pass below, so that was a key level support. We also saw that the price tested once, twice, 3 times, and the 4th time you're out. So this was not an old ball game here. This is definitely just one of those situations where you keep testing a support level and it's inevitably going to break. It's easy to say in hindsight, of course, but we had this descending type of pattern, couldn't break through, and effectively broke to the downside. So it's kind of what we're looking at here. Another thing too, to touch on as well, I want to help you out with some dollar cost average targets, is just knowing that this Fibonacci retracement level, it was drawn out here, right, this key level support. I haven't drawn it out yet today because the simple fact that the candlestick hasn't closed yet. So you never truly want to move your Fibonacci retracement levels until the candle is closed, preferably on the 1 day or higher. That said, take a look at some of the key level stuff here. We can see that we broke below 30 on the RSI previously, but we're testing it again here today. So does that mean we're going to see a bounce back and a recovery and the price is going to go straight up from here? No, it doesn't mean that. It basically just implies that we're testing another key level support, and if history repeats itself, it could very well continue lower. So try not to think for even a moment that we're in the clear just yet, because if Bitcoin continues to progress lower, Ethereum will almost 2 to 3x that. Okay. In fact, I think we're at about 3x negativity here on Ethereum versus Bitcoin, because Bitcoin's down, I think, 3% on the day so far, and we're looking at about an 8 or 9% correction here from Ethereum. So a little bit of a knee-jerk reaction. So if you're going to take a long position, just be very cautious and careful. Don't have any tight stop losses, small position sizes. Those are things that we do in our community to make sure that we stay afloat in this market. Because going crazy with leverage, just trying to buy each dip, it's not gonna really do you so well. I mean, you might luck out sometimes, but it just, big picture, not great. So let's talk about the moving averages here. We're below all moving averages, of course, big surprise. I mean, pretty strong divergence there. Bitcoin is also exuding similar behavior, but if you see here and you kind of draw out a trend line from the highest point to the most recent retest, we've got some time before the price was able to break back above. So again, we're not going to be in the clear for quite a while, even when we start making higher lows. Until we start making higher highs and higher lows and break that level, we're not in good shape. And we can also see the 50-day SMA working concurrent with that. It's a very common, simple moving average. If you're going to do yourself a favor, you make sure you use the 50-day SMA on the daily. It really helps you understand if you're on the right side of the tracks, and it kind of identifies a lot of trends too. And the trend right now is not good, but you have to make sure that the trend is your friend, right? So, instead of taking a bunch of long positions and kind of beating your head against the wall, why don't you take some shorts and maybe consider pushing it to the downside? Because that's pretty much the market that we're in right now. We've likely got another month or two at least of red behavior. And a lot of this is happening because the CPI data, we have 0.3% inflation, and we have a Fed meeting next week. So there's just a lot of negativity looming right now. Normally weekends are pretty green. This is a complete contradiction there. This is essentially telling us that, hey, Even though patterns do repeat themselves, they don't have to. That's essentially what's happening. All right, anyways, enough about that. So that's kind of where we're at there with the moving averages, etc. We have a MACD divergence here as well forming. Bitcoin has the same exact scenario. This doesn't necessarily mean it's going to continue. It just implies that the bulls have lost control. Obviously, there's a lot of selling pressure. And a lot more selling pressure than you expect on a weekend too. That's what's interesting about this. The volume has increased significantly from actually the traditional work week, which is unique and unusual, but there's a lot of fear, uncertainty, and doubt in the market, and a lot of folks are selling. That's just kind of the bottom line. So taking a look here at the 4 hour, all normal stuff. Prices kind of moving down below the moving averages. As you can see here, RSI under 30. This is a case in point where I like to kind of drive home here that just because the price is just below 30 on the RSI doesn't mean it's going to recover. But it does give us the likelihood of the fact that it should. What I mean by that is that, in most cases, if you look at, most coins' history, there are some rare outliers, but for the most part, we stay within the lines here, okay? So again, obviously this downtrend we've seen 2 significant times. This is the 3rd time where the price has gone way below that type of support, but 30 on the RSI can commonly become a support. What we need to understand too, though, is that now that we're under 30 on the RSI, that's essentially going to be working as a resistance level. So that's not great, okay? So keep in mind, being under 30 now, we might stay under there for some time, and we'll continue to have bearish divergence until it can break back up above. So I do not love the sign that, the look of that. It's not a great sign. What we can look at here at TD sequential though is some, I guess, a little bit of reprieve, or perhaps, in other words, we can see we worked all the way down to a 9, and now we're in extreme overtime here. So we're hitting 1, 2, 3, we're 12 hours into overtime. So basically implying that we shouldn't have seen this kind of continuation of the downside, but we have. Once again, CPI data, inflation, the whole 9 yards, all that stuff is factoring in. That's pushing this extreme behavior to the downside. But normally, when you see a 9, that's a case in point where the price should recover. That's what's normally supposed to happen. So just keep in mind, we're seeing abnormal behavior right now, but this is an abnormal world we live in. So the sooner you can realize that we're all abnormal in our own way and that this world is not perfect, the easier this is going to be, right? Also, positive mental attitude. I like to make sure that you understand that it's really important to, I wouldn't say joke about this because it sucks that our accounts are down. Totally. I mean, mine too, right? But I'm still able to survive on my trading account based on the simple fact that I'm acknowledging these things that I'm talking about, but more importantly, making sure that I remain in a stable foundation in my own life. In other words, I exercise frequently, I walk my dog, I do everything I possibly can to stay healthy. And that translates into a positive mental attitude, and that positive mental attitude is huge when it comes to trading. So do yourself a favor and don't be a Grinch and do not trade when you are upset. It's the worst thing you could do for yourself. It leads to revenge trading, and it's a whole 9 yards. I cover all that in my trading academy, but I can tell you right now that it's disadvantageous. And thank you also to my current community members that have reached out and let me know that the Trading Academy is helping. I love to know that because it's really awesome to be able to connect with you in that way, right? So again, thank you so much. That being said, let's go ahead and wrap things up with a 1 hour. Looking at the cloud, the whole 9 yards here, basically everything is screaming downside. Now, is it going to continue to go much lower? Maybe not. We're probably at a support level for Bitcoin, and Ethereum does look like it's kind of bottoming out, but we can't go with that assumption of the fact that the price is going to just recover. So please understand that. It seems very juicy here. What I'd recommend, of course, is adding to your position. I know 1,500 is kind of a nice position, at least in my opinion. I think that's a good value. We will probably see lower eventually, just based on Bitcoin probably coming lower too. But generally speaking, at this point, wouldn't hurt to dollar cost average a little bit, right? Just try not to take a long position with a tight stop loss. If anything, take a long position with a tight profit target, and that would help you the most, right? Because tight profit targets is really all you can focus on right now. Like in our community, for example, when I'm sending out signals, I'm sending out shorts and longs, of course, depending on the direction. But I'm making sure that we're using smaller position sizes and maybe just say 10x leverage, for example, with a small position size, or a standard position size with a spot trade, right, for the long side to the upside. So there's a lot of different schools of thought, but I would just really recommend at this point right now, with things being so crazy and chaotic, you do not overexert yourself and do too much that you're not comfortable with. Everyone has a different risk tolerance, but it's just one of those things you got to be aware of. All right. Last thing to kind of summarize here is we got a 9 on TD sequential, extreme overtime, reset down to another 9, more overtime. So again, when will the bleeding end? That's the question. We don't know. So what can we do to prepare ourselves between now and then? Well, be very careful and cautious, of course. Do not take a long position just because it feels good to buy the dip. Add to your position, sure. Perfectly fine, DCA all the way. I do feel like 1500 is a pretty good value for Ethereum. It'll probably continue lower though. That's just kind of the bottom line. So don't put all your eggs in one basket. But what this is telling us here is that we got 2 9s in a row on TD sequential. The likelihood of it continuing lower from here is pretty low. In other words, the bears can only sell so much, right? And there's going to be that shift of momentum where the price is going to come back up, depending on the overall sense of things. So again, just something to note that we're extremely overexhausted on the hourly, the 4-hour, and the daily looks pretty terrible as well. So really, there's nothing advantageous here at all, except for the simple fact that, actually no, it's a kind of a stretch. There is really no simple fact. I mean, bottom line is that we are overextended to the downside, sure, but this is proven to defy the laws of trading, and we shouldn't be here, but we are, right? Again, I know I'm speaking the obvious, and I hope that it makes sense to you and how I'm explaining this, but the bottom line is that we should expect the price to continue lower. I don't think you should short right now. I don't think you should long right now. Now, it sounds kind of weird, but I think no position for the moment is the best position. Dollar cost average wherever possible, if at all. And of course, be patient. The key to being a good trader is to not force a trade. All right. I've sat literally on my hands for 5 to 10 days in a row sometimes, waiting for the right opportunity. Granted, I've missed a lot of opportunities too. There's no doubt about that. You'll always miss opportunities. The key is to focus on the right ones, wait for confirmation. We don't have any confirmation here except for the price continuing lower. It's going to continue lower. That's the confirmation we have so far. So make sure you just be mindful of that and understand that this probably isn't over yet, at least the continuation of the downside. But I wouldn't be surprised if we see a slight recovery just based on us being overextended in the shorter term time frame. Again, small position sizes and or no position at all is the best case scenario. Make sure you have tight take profit targets if and when you were just to decide to take entry on something like this or buy the dip. All right, just keep that in mind. All right, enough about that. I hope that you learned something here. Of course, and if you want to become a better trader, again, CryptoCache.tech is a site. The link is in the description below. Message me if you are military and or third world countries, or living in one, of course, because I do have discounts for that to ensure that you can have an affordable learning experience, right? So check that out in your own time. Thanks again so much for your service. I look forward to seeing you all in the next video. Have a great rest of your day. We'll see you.